So sales are up in the Canadian real estate market, and London just approved 5,551 new homes. But what is the real story? The real story is actually around permits and site readiness. In this video, I'm going to cover what's happening in the Southwestern Ontario real estate market. I'm also going to talk about the macro real estate market in Canada and how it might be affecting you. One very unique thing we do in our videos is we actually touch on commercial real estate, agriculture, residential, and new development, and we talk about how they all intersect. I also normally do these videos live so you could ask questions. I apologize for the construction noise in the background, but I didn't want to miss a week because things are moving very quickly in the real estate market. And whether you're looking to buy, sell, or invest, it's very important for you to know what's happening. Boots on the ground, because a lot of the headlines that you're reading in the news are working with old data. And let me explain what I mean. So I'm a very active real estate agent. I run a team in Southwestern Ontario that covers every asset class. Think of this like your Navy SEAL team of operators. But when we're transacting with people, we're getting calls for leads, we're looking at properties, we're writing offers. A lot of times those offers are conditional, and the deal cycle can be anywhere from 30 to 120 days to 6 months plus in the commercial space. Which is why I said boots on the ground data is even more important than headlines, because headlines are latent indicators of action versus what I give you here, which are the active indicators of what's happening in the real estate market. Rates are in a place where money is fairly affordable given historical contents. People are always waiting though. Is it going to drop more? Are prices going to decline more? And the buyers that are taking action and making offers on places are often finding success, sometimes way less than the list price. In other cases, right at list price, because sellers are also sharpening their price points and doing big time reductions to find the market and find out where these buyers are actually at. Now, the burning question, buyers want to know if rates are coming down, sellers want to know if prices are going up, but both are focusing on the wrong levers. Near-term supply and your negotiating leverage moves with permits, zoning, and site readiness. My read this week is national sales have improved, but the real activity that's happening in Southwestern Ontario will be led by ready-to-start projects and listings hitting the market ahead of that early September wave. I can tell you we have a number of builders who are completing spec homes. Actually, Halcyon's a great example. They just finished their model, the Myra in Heathwoods, and that is a great example of boots on the ground where we have been grinding on that site, and we haven't been fielding a ton of calls off realtor.ca or even the online lead generation, even though we get a lot more exposure given our platform. We opened up the model and we actually had a pile of people come. I think we fed 60 people with Chef Chad's food truck, and we had a very busy open house weekend. Now, the buyer sentiment's still the same. A lot of people are just waiting to make a move, and I know the deal cycle with a lot of these leads are going to have to require quite a bit of follow-up, but I think it's a very interesting note that buyers are out there looking at properties. Now, let's talk about the macro headlines. So national home sales rose again in July, up 3.8% month over month and 6.6% year over year. The home price index was flat month over month and down 3.4% year over year, while the average price nudged up 0.6% year over year. The 5-year Government of Canada bond yield held around the high twos last week, or about 2.9% midweek. That's supportive for rate holds, renewals, and underwriting consistency on term sheets. Bank of Canada's latest deliberation underscored a data-dependent path, slower growth versus sticky and underlying inflation. Translation, no sudden policy moves, but no green light to get complacent either. We always love taking a perspective and looking at capital flows. Net leased investment volumes climbed roughly 27% year over year to Q2. Cap rates were broadly steady around that 7% for quality covenant deals, signaling solid demand for yield and durable cash flow. We are very active in the commercial and the investment space, and we are definitely seeing people wanting to find cash flowing assets and good business being done. But we also see purpose-built apartment buildings and certain locations yielding a much better cap rate for sellers than what the 7% implies. Now, in terms of an Ontario snapshot, we're sitting at about 4 to 5 months of inventory. New listings were roughly flat in July. Sales did improve, and the GTA rebound since Springs continues to lead the province and the headlines. I think there's going to be a trickle effect down the highway that comes with that. We've been busy because we aren't the GTA, we are in Vancouver. So a lot of those headlines you're reading actually don't necessarily affect our market. It's happening with your asset in your area. Pay attention to the micro, but the opportunity is actually in the micro. Now, where's the opportunity with that? Pricing discipline. With the HPI flat month over month, the market is rewarding sharp pricing and turnkey presentation. Over asking strategies without real differentiation are getting exposed. People that are very sharp with their price point, well staged, are selling ultra fast, sometimes in competitive situations. What to watch next? The CPI and New Housing Price Index this week will give an important read through on builder pricing, power, and consumption pressure heading into the fall. So we are paying very close attention to that. Now, for Southwestern Ontario, approvals surged. There were 5,551 homes approved in July. Year-to-date approvals are strong, and the current council is really pushing that pipeline. It is the single biggest near-term driver for inventory and construction timing. Now the question is going to be, is the market going to absorb that product? And when are builders really going to start churning? I do believe there are great opportunities in new construction short-term, but long-term, I still think that builders are dealing with land and material costs, and long-term, building new is going to be a luxury. So those who wait may be sorely disappointed, as builders are hungry and they are looking to do deals right now. In terms of a general Southwestern Ontario market check, Elstar pinpointed recently that there were balanced conditions with modest sales lift from June. The next test in this absorption is going to be right after Labor Day, so keep an eye for the stats then. In St. Thomas, the story is all around affordability and industry pull. Affordability remains the draw, and industrial momentum tied to the major battery supply chain projects continues to underpin the demand expectations going into 2026. Keep an eye on the municipal agendas and servicing items that unlock infill and small-scale new build opportunities. Port Stanley is in full swing. Obviously, we are right in summer and people are enjoying all the infrastructure and entertainment upgrades in that area. There are some lifestyle signals, small but telling municipal improvements happening, like this week's family-oriented safety and amenity updates, adding to the town's appeal. These micro investments are showing up in buyer sentiment, and you're seeing a little bit more activity in that market than you did previously. And we've actually had some really good activity with Domus's launch of Phase 2. We're in 2 conversations now for pre-construction sales, which we haven't really seen a lot of. Builders have been building the models and selling them, and we churned through almost all of Phase 1 fairly quickly compared to the marketplace. Those inquiries on the to-be-built projects are very telling. Now, for Lambton Shores, council met on August 12th with minor variance items scheduled later this month. I wouldn't be surprised if we see some late summer rulings that greenlight some infill projects that will be ready for spring construction. In terms of waterfront properties in, say, the Grand Band area or up along the Huron coast, top-end inventory remains thin at this level. Value skews to finished quality frontage and walkability, so like height from the actual beach walkout really does matter, and maybe why some properties are trading while others aren't. And we're seeing really good activity sub 900. We actually have 2 properties, one in offer, one that's about to firm up tonight, which gives you a very different sentiment than maybe 8 months ago in that area. Now let's cover some multi-asset insights. From a land perspective, where official plan amendments and zoning are advancing, say notably in London, paper value on well-located parcels is holding better than headlines imply. Entitlements are definitely the multiplier. We have a number of land development sites across Southwestern Ontario, and we're fielding these inquiries on a regular basis, and there's definitely an appetite for it. From an investment perspective, net lease, so credit, retail, healthcare, daily needs remains liquid. If you're trimming, there's a real bid in depth for long-term CPI-linked and stepped-up leases. But again, regardless of asset classes, people are being very sharp with the deals they are looking to pencil. So whether you're a seller or a buyer, you have to know your numbers. In terms of industrial commercial real estate in the, say, London area, vacancy hovered near 4.2% in Q2. Quality small bays like near the 401, 402 with clean environmental power and loading continues to outperform. We have 2 sites we're working on right now. One is actually a data center on York Street. The other is actually a 38-acre parcel fronting onto the 401 that we just launched as a potential industrial redevelopment opportunity. Are fielding some interesting conversations. I do think the market is moving to Southwestern Ontario, hence why people are looking at some of these sites to set up infrastructure for the next 20 to 30 years. And in the agriculture space, listings remain scarce. Pricing is firm where tile drainage and proximity to services stack up. And we actually expect stronger fall activities as operators start planning for their 2026 rotations. We just listed 230 acres in Nairn, about 190 workable, very interesting parcel. And the price point is very sharp on it. And we already have 2 interested parties, and it's not on MLS. This should give you an idea of the sentiment around agricultural real estate. Now, what does this all mean for you? Well, if you're a buyer, use tighter due diligence, timeline, and pre-underwritten lender letters at today's 5-year rates to beat similar prices. HUD approved but not started projects, look for leverage and upgrades, timelines, or deposit structures before the September inventory pulse. Because if things start to pick up, the deals will get a little bit tighter. Now, if you're a seller, price to the comps, sell to the upgrades. Flat month-over-month HPI or home price index means that your presentation really does matter now more than ever. I'm actually walking away from listings where they're not realistic on price point because I'd rather tell them what I actually think rather than what they want to hear to put them in a position to succeed than just list the property and have to reduce the price in 6 to 8 months where we may still see a declining market. And what's my watch list for the next 14 days? I'd say I'm going to be looking at housing starts to see the early signal and how approvals wave into actually putting shovels in the ground. Definitely going to watch CPI and new housing price index, which are crucial reads on builder pricing power and consumer pressure heading into the fall. And keep an eye on credit conditions. The next central bank credit survey will definitely color the developer financing and acquisition appetite. And one of our favorite things to do, because we are hyper local, so we have a Navy SEAL team that covers Southwestern Ontario with experts in each market. One of our main jobs is keep an eye on what's happening on council, looking for planning files that linked to intensification corridors, Lambton Shores, London, Elgin County, Huron County, Sarnia. There's some huge opportunity zones coming down the pipeline. And if you want first access to those opportunities, just comment insiders on this video or click the link below and we'll get you in our database so you get the information before the public. Real estate's all about leverage. That's what we try to provide here. If you enjoyed these insights, let me know. If there's things I didn't cover that you wanted covered in the next one, please let me know as well. We do it for you. And our goal is to become the most trusted name in real estate by providing value first. I'll see you on the next one.